In this video, we are going to discuss about the process, costing and reconciliation of cost and financial accounts. Let we discuss about reconciliation of cost accounts and financial accounts. When cost accounts and financial accounts are maintained separately in two different sets of accounting books, the profit or loss shown by both the may not agree. Therefore, it becomes necessary that periodically the profit or loss shown by the two sets of account is reconciled. A reconciliation statement or a memorandum reconciliation statement is prepared showing the reasons for difference between the results disclosed by both cost and financial books. Next, we see the need of reconciliation of cost accounts and financial accounts to reveal the reasons for the difference in profit and loss between cost and financial accounts, to check the arithmetical accuracy of both sets of accounts, as well as to detect the errors and omissions committed in the accounts, to ensure the reliability of cost accounts in order to correct ascertainment of cost of production. Let me see the format of reconciliation statement. Firstly, profit as per cost account is the base for all the reconciliation statement as given in a sum. The following items should be added to the account. That is, firstly, income shown in financial books only and expenses shown in cost accounts only, and then over absorption or over recovery of overheads, and then over valuation of opening stock of raw materials, work in progress, and then under valuation of closing stock of raw materials and work in progress, and finally, error which increased financial product. These items should be added to the reconciliation statement. Followed by this, the following particulars should be deducted from the reconciliation statement. Loss as per cost account is a base for all the reconciliation statement. And then expenses shown in financial books only, income shown in cost accounts only, under absorption or over recovery of overheads, and then under valuation of opening stock of raw materials and work in progress, and then over valuation of closing stock of raw materials and work in progress. Finally, error which decreased financial product. These should be deducted from the reconciliation statement. And then finally, we have to conclude the sum by deducting and adding the following items. Then finally, the answer will be profit as per financial accounts or the loss as per financial accounts. Let me see the format of memorandum reconciliation account. The following particulars should be entered in a debit side of the account. That is, loss as per cost accounts, expenses shown in financial books only, income shown in cost account only, under absorption or over recovery of overheads in cost accounts, under valuation of opening stock of raw materials, work in progress and finished goods in cost accounts, over valuation of closing stock of raw materials, work in progress and finished goods in cost accounts, error which decreased financial profit. And on the credit side, the following particulars should be entered. Profit as per cost accounts, income shown in financial books only, expenses shown in cost accounts only, over absorption or over recovery of overheads in cost accounts, over valuation of opening stock of raw materials, work in progress and finished goods in cost accounts, under valuation of closing stock of raw materials, work in progress and finished goods in cost accounts, error which increased the financial profit. The surplus will be transferred to profit as per financial account and the deficit is transferred to loss as per financial accounts. Let me see the problem regarding the reconciliation of cost and financial accounts. Illustration 1. When profit as per financial and cost accounts are given, the profit shown in a financial account was rupees 1,12,870, and for the same period, the cost account showed a profit of rupees 27,040. Examination of the accounts show the following differences. Depreciation under cost account is rupees 98,260. Depreciation under financial account is rupees 1,05,200. Stock valuations. Opening stock under cost account 2,75,100. Under financial account is rupees 2,55,100. Closing stock under cost account is 1,82,180. Under financial account is 1,87,500. Profit on the sale of asset under cost account is nil. Under financial account is 8,500. And dividend received under cost account is nil. Under financial account is 26,350. Imputed rent charge under cost account is 32,500. Under financial account is 26,350. Reconcile the profit figures. Here, the solution, reconciliation statement in a particular column. Profit as per cost account, as we already say, it is a base for all the sums. So, the amount is 27,040 and the following item should be added to the profit as per cost account. That is, profit on sale of asset, 8,500 and the dividend received, 26,350, imputed rent charge, 32,500. Overvaluation of opening stock in cost account 20,100. Undervaluation of closing stock is cost account 5,350. These are the income that should be added to the profit as per cost account. Here, the overvaluation of opening stock in cost account is calculated by subtracting the opening stock of cost account and the financial accounts, and the undervaluation of closing stock in cost account is derived by subtracting the closing stock of cost account and financial accounts. These items should be added with the profit as per cost accounts, and then we should deduct the charge of depreciation in cost accounts. Finally, the profit as per financial accounts will be derived. The charge of depreciation in cost account is found by subtracting the depreciation under the cost account and financial accounts. Let me see the sum regarding the memorandum reconciliation account. Prepare Memorandum reconciliation account from the following data. Net profit as per financial book is rupees 63,780. Net profit as per costing books is 66,760. Factory overhead under the recovered in costing 5,700. Administration overhead recovered in excess 4,250. Depreciation charge in financial account is 3,660. Depreciation recovered in costing is 3,950. Interest received but not included in costing is 450. Income tax provided in financial account is 600. Bank interest credited in financial book is 230. Store adjustment that is credited in financial book is 420. Depreciation of stock charged in financial book is 860. Dividend appropriated in financial account is 1,200. Loss due to pilferage provided only in financial book is 260. Solution: Memorandum reconciliation account. In a particular column, the following items should be entered in a debit side of the memorandum reconciliation account. That is, 2 factory overhead under recovered in costing is 5,700. 2 expenses, losses and appropriations shown only in financial account. That is, income tax is 600. Depreciation of stock 860. Dividend appropriated 1,200. And loss due to pilferage to the 260. And totally 2,920 is to be added with 5,700. And in the credit side, the following totally 2,920 is to be added with 5,700. And in the credit side, the following particulars should be entered. By profit as per costing books 66,760. By administration overhead recovered in cost account is 4,250. By depreciation over recovered in cost account 290. That is, it is obtained by subtracting the depreciation under the cost accounts and financial accounts. That is, 3,950 minus 3,660 is equal to 290. By income shown only in financial accounts is income interest received 450, bank interest 230, store adjustment 420, totally 1,100, and the total will be 72,480. So the balance will be entered in a debit column to profit as per financial account. The remaining amount is 63,780.
Now let us discuss about the accounting of byproducts and joint products. Before discussing about the accounting procedure of byproducts and joint products in detail, let us first know what is joint products and byproducts briefly. Joint products. What are joint products? When we produce multiple products in the common production process, it is said to be joint products. So, joint products represent 2 or more products of almost equal importance which are produced in natural proportions simultaneously from the same material in the same process. They do not require different process in production. These joint products usually have high economic importance and commercial value since it is very economical because we need not involve in different process in production. Only in one single production process, various kinds of products can be derived. For example, dairy industry, where when we process the milk, we get skimmed milk, butter, cream, various kinds of dairy products in one single process. Same as the oil refining process. We get gasoline, petrol, diesel, coal, tar, kerosene, etc. Features of joint products. Here are some features of joint products. Usually, each and every product that is derived from the single production process are given equal importance and no single one of them can be regarded as the main product. And these are produced simultaneously from the same material and common production process. And usually joint products require further processing after the point of separation comparing to the byproduct. Next comes byproducts. Byproducts are nothing but the secondary products generated during the production of the primary product. In short, we can say that additional product that is derived during the course of production of the primary product. Features of byproducts are they are relatively small in value and they emerge incidentally in the course of manufacturing the main product. For example, the aim of conducting oil refining process is to derive petrol and diesel, but the additional products like coal, tar and wax can be obtained from the same process simultaneously. They are said to be the byproducts. In order to be more clear between joint products and byproducts, here are a few differences between them. Joint products, multiple products produced by a single production process, whereas byproducts are the secondary products recovered in the manufacturing process. In joint products, both the products that is being produced have equal importance, whereas in the byproducts have the less importance compared to the primary product. Joint products are produced intentionally, whereas byproducts are emerged accidentally. In joint products, both the products that has been produced have similar sales value, but byproducts have lower sales value than the primary product. Example of joint products are milk, cheese, and ghee, etc. Examples of byproducts are food fines and molasses, etc. Now, let us discuss about the accounting for joint products. In order to calculate the accounts for the joint products, there are totally 6 methods. They are average unit cost method, physical unit method, survey method, gross margin method, standard cost and market value method. Now let us discuss a sum under average unit cost method. The Rama Corporation produces 4 products in a manufacturing process. The corporation produced 10,000 units of A, 20,000 units of B, 15,000 units of C, and 25,000 units of D. The cost before split off point for the 4 products was rupees 1,40,000. Using the average unit cost method, we have to calculate the unit cost and we have to show how the joint cost would be apportioned among the products. So first we have to find out the average unit cost. So there is one formula to find out the average unit cost. Joint cost divided by total number of units produced. Actually, the joint cost for producing all the 4 products A, B, C and D before split off point was given in the question itself, 1,40,000 divided by total number of units produced. So we have to add all the 4 units that is produced, 10,000 plus 20,000 plus 15,000 plus 25,000. When we add all these units, we arrive at 70,000. So when we divide 1,40,000 divided by 70,000, we get rupees 2 per unit. So to produce one single unit, 2 rupees has been incurred. Now we have to split up the portions of cost. Okay, A, B, C and D. So there are 10,000, 20,000, 15,000, 25,000 units produced. So when we give 2 rupees per unit, then to produce 10,000 units, 10,000 into 2 rupees, we get 20,000. Likewise, we have to calculate for all the 4 products. By doing this, we can find out the cost apportioned among the different products. Next comes survey method. The question is, in the timber industry, the milling operations to the split off point during a period amounted to rupees 17,400 with the following production. First grade timber 400 units, second grade timber 500 units, third grade timber 600 units. Now you are required to apportion the joint cost on technical evaluation with points 5, 4 and 3 for the first, second and third grade respectively. In order to arrive at the solution, we have to open 7 columns. First one items, second one units, third one points attached, fourth column equivalent units, fifth one cost per equivalent unit, sixth one apportion cost and the last column is cost per unit. Now the units for first, second and third grade is given in the question itself. 400 units, 500 units and 600 units. Now in the third column we have to give points attached. That is also given in the question itself. 5, 4 and 3. To find out the equivalent units, that is fourth column, we have to multiply the second and third column. So 400 into 5 for first grade we get 2000. 500 into 4 for second grade we get 2000 and 600 into 3 for third grade we get 1800 as equivalent units. Now when we add all these units together we get 5800. Next, to find the cost per equivalent unit, we have to take the total amount that is given in the question, which is 17,400 divided by the total number of equivalent units, which is 5,800. Now when we divide these both values we get 3 units for each. In next column, we have to find the apportioned cost. In order to get the apportioned cost, we have to multiply the fourth and fifth column, which is 2000 into 3, 6000, 2000 into 3, 6000, 1800 into 3, 5400. Now, when we add all these costs together, we get 17,400. Lastly, to find the cost per unit, we have to divide the sixth column by the second column. That is, apportioned cost divided by the units. For first grade, the apportioned cost is 6,000 and the units that is given in the second column is 400. So 6,000 divided by 400 we get 15 units. Similarly, 6,000 divided by 500 for second grade we get 12 units and 5,400 divided by 600 for third grade we get 9 units. So this is the solution for the sum under survey method. Next one is the third method, which is gross margin method. The question is, from the following information, apportion marginal cost and fixed cost on suitable basis and obtain profit or loss under each of the joint products. Sales A is 200 kgs at rupees 40 per kg and for B 400 kgs at rupees 20 per kg. Total cost, that is marginal cost, is rupees 6,000 and fixed cost is rupees 5,000. Now we have to open 5 columns, which is sales value, prorated marginal cost, marginal contribution, prorated fixed cost, and the last one is profit. For product A, sales value, how we have to calculate is 200 kgs at rupees 40 per kg, which is given in the question itself. So 200 into 40, we get 8,000. Similarly, for product B, 400 kgs at rupees 20 per kg. So 400 into 20, we get 8,000. Totally, we get 16,000. To find out the prorated marginal cost. So marginal cost is already given in the question, which is 6,000. Actually, the total cost is 10,000 and in that marginal cost is 6,000 rupees and fixed cost is 5,000 rupees. Now, in the question, already the sales of A and B is given, which is 200 kgs and 400 kgs. This sales value should be taken as ratio, 200 is to 400. So totally we have 6,000 and we have to split up these 6,000 based on the ratio 200 is to 400 for product A and product B. We get 2,000 for product A and 4,000 for product B. in order to find out the marginal contribution, we have to subtract the first and second column, which is sales value minus prorated marginal cost. 8,000 minus 2,000, 6,000. For product B, 8,000 into 4,000, we get 4,000. And the next column is prorated fixed cost. And fixed cost is also already given in the question, which is 5,000. Now we have to split up the 5,000 between product A and product B. For this, we have to take the ratio based on the marginal contribution, which is for product A 6,000, product B 4,000, right? So this 6 and 4, we have to take it as ratio, which is 6:4. Now, when we divide 5,000 based on this given ratio 6:4, we can get 3,000 for product A and 2,000 for product B as prorated fixed cost. At last, to find out the profit, which is very simple, we have to subtract the marginal contribution minus prorated fixed cost, which is third minus fourth column. Now 6,000 minus 3,000, we get 3,000, and 4,000 minus 2,000, we get 2,000. So now when we total up all these values, we get 5,000. Thank you everyone for patiently listening to the presentation.